Good afternoon, and thank you for joining our fourth quarter and full year 2023 earnings call. Global MAUs hit another all-time record of 498 million, growing 11%, accelerating from last quarter and growing sequentially in all of our geographic regions. And while growing revenue and engagement, we continue to demonstrate operational efficiency and disciplined expense management, resulting in Q4 adjusted EBITDA of $365 million, or a 37% margin, up more than 1,400 basis points from last year. We made significant investments in AI that drove improvements in our overall platform for users and advertisers. When we started the year, we laid out a plan to achieve around 200 basis points of adjusted EBITDA margin expansion for the full year. We were able to deliver 660 basis points of adjusted EBITDA margin expansion for 2023. We had our fastest global MAU growth since Q1 of 2021, and we're seeing our best product market fit in years, as evidenced by the strong growth in our Gen Z demographic and the fact that our most recent user cohorts are significantly more engaged than user cohorts from prior years. Throughout 2023, we've been focused on driving performance for advertisers by rolling out our lower funnel tools, which include mobile deep linking, the API for conversions, and clean rooms, and most recently, direct links. The percentage of revenue from advertisers who have adopted at least 3 of these tools increased from 2% at the beginning of 2023 to 13% at our Investor Day in September to 23% by the end of the year, marking strong progress toward our goal to be a meaningful performance player in the digital ads market. The increased performance and value we were able to drive for advertisers in Q4 was particularly impressive. We more than doubled the amount of clicks we drove to advertisers year over year, a substantial increase during a retailer's most important time of year. Additionally, sophisticated advertisers are seeing the value of investing in clean rooms to measure campaign performance on Pinterest. Recently, a large CPG partner enabled measurement through clean rooms and found that their Pinterest campaign drove a 16-point lift in incremental sales. Today, I'm pleased to announce our next third-party ads integration with Google. This partnership will focus on monetizing several of our currently unmonetized international markets by enabling ads to be served on Pinterest via Google's Ad Manager.
In Q4, our global revenue was $981 million, up 12%, or 11% on a constant currency basis. In Q4, ad impressions accelerated to 33% growth, driven both by increases in total impressions and increases in ad load. Offsetting the growth in ad impressions was a 16% decline in ad pricing, which lowered prices and improved return on ad spend for those advertisers. We expect Q1 2024 revenue to be in the range of $690 to $705 million, representing 15 to 17% growth and a meaningful acceleration from our Q4 23 revenue growth.
We're driving more performance to advertisers than ever before. Large advertisers are opening up their performance budgets for us. Doubling our clicks sent to advertisers year on year is a strong indicator of not only the value that we have already created, but of how much more value capture is still left in front of us on that. We see Pinterest as significantly under-monetized across the board, but the most under-monetized internationally. We have approximately 80% of our users outside the US, but only 20% of our revenue. So as we shared at our Investor Day, we think that's a meaningful opportunity for us to increase that ARPU internationally. So we're quite pleased with the way the Amazon partnership is progressing, and the Google partnership with the focus on our unmonetized or under-monetized international markets, we think will be quite additive as well. Certainly, on Gen Z, we've talked about, it's more than 40% of our user base now. We're helping users find more of what they're interested in on Pinterest and, delivering a positive environment for them that they see as an oasis away from the toxicity of much of the rest of social media. This gets cited to us directly, particularly by Gen Z users. And so we are carving out a unique space for ourselves that is quite different from the rest of social media. And so it is a really unique and ownable space, and we're seeing that really cut through with users and again with advertisers as well that see it as a brand safe environment. Pinterest had previously solved digital window shopping, but all the stores were closed. Actionability was hard. How good was the digital window shopping? So good that people would keep coming back even though all the stores were closed. But as we open those stores, people have good reason to come back more and more frequently. So the MAU acceleration and the growth there is broad-based, and it is both bringing new users onto the platform, winning with Gen Z, as well as driving depth of engagement with new adjacent use cases and better actionability that cause users to come back more frequently. And importantly, we have completely unique signal that you wouldn't find elsewhere around the user curation particularly around their commercial intents. And we see that really just continuing to drive that flywheel as we go forward.